Okay, let's start with the new chapter is cost of capital. Now, if anybody knows, please tell me what do you mean by cost of capital? Yes, anybody know about it? No, anyone want to try for it? See, the word itself says its meaning. Yes, will anybody tell me? Okay, I'll tell you. See, what do you mean by cost of capital? See, the word cost is expense. When you are incurring something, when you are paying something to somebody, that becomes your cost. That becomes your expense. Okay, so cost of capital. Now, this is an expense on capital. What do you mean by capital? Capital means your funds, your raised funds through the form of shares, debentures, bonds, maybe shares having two different types, that is equity and preference. Okay, so because company raises the capital through the securities, different securities like shares and debentures. Shares may have two parts, equity and preference. Then you may have bonds, etc. Okay, you may raise your capital, your funds through different securities. Now, when people come and invest in your company, suppose you are investing in a Reliance company, you are buying shares or debentures of that particular company. Now, don't you want anything in return? Yes? You don't want anything in return?
No.
Want, ma'am.
Yes, you want. You want something in return, no? Just like you want to
Yes,
just
ma'am.
invest in the company, no. You also want returns from that particular invested amount in the securities of that particular company. Yes, you want some returns, some good returns. Therefore, you have chosen the well reputed company, that is Reliance company, right? You try to choose those companies which are well reputed, which are which are already established in the market, which has a very good amount of goodwill in the market. So you don't want to take risk, and therefore you have chosen a good company, a reputed company, a well-known company, right? So you want something in return. If you have invested in shares, you will expect to get dividend from that particular investment in shares. If you have invested in debentures, you want to have interest from that particular investment. If you have invested in bonds, so you want uh, uh, coupon rate to be earned. Am I right? Are you getting my point, what I am trying to say?
Yes, ma'am.
Yes, ma'am.
Yes,
Yes, ma'am.
something you want in return. Dekho, it is it will be returns for you, it will be income for you, because you are earning from that particular investment which you have made in the particular company, right? It will be your investment, therefore you will be earning interest, therefore you will be earning dividend, therefore you will be earning income. It will be income for you guys, for the investors. But somebody who is paying, it is cost for them, no, it is expense for them. Think about the company who is paying you dividend. Think about the company that is I mean paying you interest on the debentures. Those who are debenture holders, they will get the interest, they will receive the interest, they will earn the interest. But look, think about and think from the point of view of the company who is going to pay the debenture holders certain amount of interest, suppose 2 lakhs rupees. So company will have to spend, no? Company is spending, you are earning. Therefore, look at the point of view of the company. It is from the point of view of the company. It says the company incurs, the company will have to incur certain costs on the capital, and capital is divided into two parts: owned capital and borrowed capital. Owned means share capital, equity and preference. Also reserves,
Preference.
huh? Yes, also reserves. To maintain reserves you will have to incur cost also. Okay. And next we have borrowed funds. In borrowed funds we have debentures, bonds, public deposits. Public comes, no, in your company they want to deposit some amount of money for certain period of time. Therefore, after the maturity date, a company will have to pay them back together with the amount of interest. Are you getting my point? Therefore, that
Yes,
is
ma'am.
also, yes, therefore that is also known as borrowed fund, public deposit, fixed deposits, etc. With debentures, bonds, bank loan, if you have taken loan from bank, if you have taken loan from somebody else, if you have taken loan from financial institutions, okay, term loan. So these are the types of borrowed funds. I hope you are getting my point. So on the borrowed funds,
Yes,
if you
ma'am.
have, yes, if you people have invested in the debentures, that means up to the maturity time, up to the time the time of the maturity, you will have to pay them. No, what you will have to pay them? Interest, dividend, etc. That means that becomes your cost. When you pay something, it becomes your kharcha, it becomes your cost, right? It becomes your cost. So that is known as cost of capital. Capital means my capital holders. Who are my capital holders? Two different types of capital holders are there: shareholders and bond debenture. You can say debt holders. Debt means borrowed funds. Those who are debenture holders, those who are bond holders will come under the category of borrowed funds. And those who are shareholders, those who are holding shares of my company. Suppose I am Reliance Company and you are my shareholders. You have purchased equity shares. Some of you have purchased preference shares. So you guys are my shareholders. I will have to pay dividend to you when I earn profits. To preference shareholders, I will have to pay dividend. At, I mean, no matter I earn profit or suffer losses, no matter, because preference shares dividend is always fixed. Okay, am I clear with the point? What do you mean by cost of capital?
Yes,
Yes,
ma'am.
ma'am.
Then, in very simple words, I am trying to explain you with the examples that what do you mean by cost of capital. Okay, now see, uh, we are going to just read out what the definition has been given here. The cost of capital is the minimum required rate of earnings. Earnings means from your point of view, I'm talking. That means if you are a shareholder, suppose you are a shareholder. So, thinking from your point of view, I'm talking that I'm reading the line as cost of capital is the minimum required. Minimum means subsecum at least. Okay, the least amount. Minimum required rate of earnings or cutoff rate of capital expenditure. That means how much is the rate that you will have to pay. Suppose if people don't invest in your company, they will invest somewhere else. Okay, suppose they will invest in bank, opting for a fixed deposit. Suppose they will invest in bank fixed deposit because they are not investing in your company. Suppose, huh? So they have an option. It's not that they don't have any option to invest other than your company. No, they have many avenues, investment avenues, right? So they will invest in suppose bank FD and they will get 8% interest. Now suppose you want people to invest in your company, not in bank FD, and you want to encourage people to invest in your company rather than going for investment in bank FD. How will you motivate them? How will you encourage them? You will increase your interest rate. Suppose bank FD is giving you 8% interest rate. I am giving you 9% interest rate. Come and invest in my company's fixed deposit. I too have an option of fixed deposit. Why don't you invest in my company's fixed deposit? This is how company will motivate you, company will encourage you, company will target you. Are you getting my point? They will target you and they will try to motivate, they will try to encourage you that don't invest in bank fixed deposit, rather you can come in my company, same amount of fixed deposit you can invest with me, and I am giving you 9 percentage ka interest. So 1 percentage you are receiving more, and because where you receive more, you will be targeted there, I mean you will be attracted there. Are you getting my point? Therefore it is the cutoff rate of expenditure, capital expenditure. It means for the company, it is the minimum rate, cutoff rate. Below that, if you come down to 9%, maybe people will switch the investment avenue. They will not come to you. They will come to, I mean, they will go to somebody else. They will go to some bank, some maybe another company, etc. So this is the cutoff rate. Below that, you cannot, I mean, and cannot keep the rate of interest or dividend to pay to them, because you want to pay to them. No, that is your expenditure. It is earning for somebody and it is expenditure for somebody else. For one, it is an earning. For another, it is an expenditure. So for whom it is an expenditure? Yes, for whom it is an expenditure?
Company.
Yes, company. Very good. Company. For company, it is an expenditure because company will have to pay dividend and interest to unit holders. Okay, to maybe shareholders, to debenture holders, to bond holders. Okay, for somebody who has given you loan, so you need to pay them interest. Okay, so it is an expenditure for the company.
Company.
Yes, so it is a cutoff rate. Cutoff it is minimum. Below that you cannot go. Yes, you can increase the rate. People will be more happy. Investors will be more happy if you increase the rate of interest because it is earning for them. No, they will receive more interest for it. So they will be more happy, no? But for you, it will be, I mean, increased amount of expenditure. For you, the expenditures will go on increasing if you go on increasing the rate of interest. So you also want to keep it minimum. It is beneficial for you also, and it is beneficial for public as well, the
Investor
investors
also.
as well. Very good. This is what I wanted to make you understand. And in simple words, I'm trying to make you understand what is cost of capital. Okay. I don't know about the others, but I am trying to make it very simple because the word is very complicated. Cost of capital. People don't understand it. Okay. So with the help of example, I'm trying to make you understand. Okay. Now, what are the components of cost of capital? I mean, what is included in the cost of capital? Okay, that means cost of capital is look at the point of look at the from the point of view of company and think from their perspective. Okay, from their perspective, we have to think about them. We don't have to think about investors. Here in this chapter, it is focused to the companies because cost is incurred by the companies. Okay, the same amount is received, the same amount is expended by the company, it is spent by the company. but the same amount is received by the investors. But I'm not talking about to think from the point of view of the investors. No, I'm asking you to think from the point of view of the company. Okay, so company will components क्या क्या है? I mean, what are the different constituents? Okay, when we think about cost of capital, what are the different constituents of it? What all is included in that? Let's see. It has cost of debt. I already told you. It has a cost of debt. Debt means, now student says debt
Borrowed.
means debentures.
Borrowed
Ma'am,
fund.
borrowed
Yes.
fund.
Yes. Debt means debenture funds. No. Students associate that word debt with debentures. They think debt is the short form of debentures, but no. Debt is not short form of debentures. It is debt means borrowed funds. Now, in the borrowed funds, there are many such types: debentures, bonds, public deposits, fixed deposits, bank loan, loan from somebody else, term loans, long term loans, short term loans, etc.
Secured loan, unsecured loan.
Secured loan, very good, very good. So that means something that you have to return it after a maturity date. You have borrowed. It is not your owned capital. It is not my own money. It is borrowed from somebody. Are you getting my point? Guys, are you getting my point?
Ma'am.
Okay. So cost of debt. Cost of debt means what? When people invest in the form of debentures in your company. Suppose 5 years. Suppose for 5 years in your company, people have invested in the form of debentures. Now you will give them a debenture certificate. In that certificate, it is written, for a certain period of time, for 5 years, Mr. So and so has invested in my company, and they have purchased 5 lakhs amount, amount of 5 lakhs, which is invested in the debentures. Okay, and the rate of interest which company gives them is 10 percentage. Suppose this is all what has been written. So all after 5 years at a maturity date, the company will pay them, the company will pay Mr. So and so this much amount. So this is all what is written in the agreement, or you can
Certificate.
say, yes, you can say the debenture certificate. This is all what is written there. Okay, so there you have written every year you will receive 10% interest. So suppose you have invested 5 lakhs for 5 years. So 5 lakhs ka 10 percentage is what? 50,000 rupees per year.
50,000.
Per year, okay? Per
And
month, I'm
5 year
asking per
period,
month.
2,50,000.
Yes. So for 5 years, you are going to receive 2,50,000. But you are opting it to receive it for every month. You, if say you want to receive it for every month. You don't want it accumulated amount after 5 years. No. You want it for altogether for 5 years. Oh, sorry. You want it in the installments of every month. So suppose 5 lakhs invested and 10% is the rate of interest. So whole amount of year, I mean per annum, for the whole year, the amount of interest which is given to the debenture holder by the company is 50,000 rupees. Okay. Now 50,000 rupees you have to divide it. It is for 12 months. You just have to divide it by 12 months. You will come to an answer of
Yes, ma'am.
1 month.
4166.
So what is the answer of 1 month?
For 4,166.
Yes, 4,166. And suppose debenture holders tells you that they want they want it for 6 months. So 50,000 is for full year.
25,000, 25,000.
Yes. So you will have to give them the interest for six months. For first 6 months it will be 25. For next 6 months it will be 25,000. So simple. So it is their income, but it is your expense. If you look at the other hand, that is giving you. It is expenditure for them. For whom? For company.
For
Therefore,
company.
it is known as cost of debt. Cost of debt means to any borrower,
Cost of
yes, to any person who has given me, who has invested in my company in the form of borrowed funds. To them, I will have to pay certain amount of some amount of interest, and that is known as cost of debt because I have to pay, I have to bear the expenses. Okay, what do you mean by cost of equity share capital? When people come in your company and invest in the form of equity, so when there is profit, you will pay them dividend. When there will be profit, you will pay them dividend. Suppose profit is 2 lakhs, you will pay them, suppose 50% dividend is there. So out of 2 lakhs, 1 lakh is paid as dividend to equity shareholders. It is an example that I'm giving you to make you understand. So it is your profit, it is company's profit, no 2 lakhs. From 2 lakhs, you have to give, you have to pay 1 lakh rupees. So paying is your expenditure, no? And to whom you
Yes,
are
ma'am.
paying?
yes.
Yes, to whom you are
Shareholder.
paying? Yes, equity shareholder. Therefore, it
Equity
becomes,
shareholder. Sorry.
therefore, it will be called as cost of equity shareholders. Sorry, cost of equity share capital. Which capital? Equity capital. Share, shares becomes your, somebody who is invested in shares becomes your shareholders. Somebody who invests in equity share becomes your equity shareholders. Now, to equity shareholders, you will pay them no equity dividend in the form of dividend. You are going to pay them. That becomes the cost of equity share capital. Okay, cost of retained earnings. I told you retained earnings means the leftover profit, the reserves, the amount that you keep reserved, the amount that you keep reserved for the future. Okay, for the future business, for the future transactions, for the contingencies. You keep it reserved. So maintaining the reserves also, you for maintaining the reserves you will have to incur the cost. Okay. So that is known as cost of retained earnings. Earnings means profit and retained means leftover. Leftover profit, which is after paying to everybody, everyone. Now the leftover profit of the company is known as retained earnings. And to maintain that, you will have to incur cost. And the last is cost of preference share capital. So what do you mean by preference share capital? I hope you know the difference between equity and preference. When there is profit, only then the dividend is given to equity shareholders, right? But
Yes, ma'am.
Yes, ma'am.
yes, but
But
when
dividend preference
yes,
share capital is
not
fixed.
fixed. Yes, looking at the preference shares, it is fixed in nature. That means even when there is loss in the company, you will have to pay them the dividend. To whom? Preference share capital. Preference share capital will never sacrifice. They are not the real owners of the company, no. They just invest it for certain, like a few period of, a few number of years, and they go away from the company. Their motto is to earn the profit. That's it. But equity's motto is to grow the company. Okay, for the long term, they think for the long period of times, maybe 20 years, 30 years. After 20 years, my company will be here. Okay, from here to here. The equity are known as real owners of the company. Preference shares will never sacrifice. They will say, "What am I got? What I am like going to do if you have suffered the losses? I've got nothing to do with it." So, company will have to pay dividend to preference shareholders, even if the company is suffering with losses. Am I clear with the concept?
Yes, ma'am.
Yes, ma'am.
Okay. So let us quickly, we have discussed all these things in detail, huh? Let us quickly come to a next topic, which is known as overall cost of capital. Now, what do you mean by overall cost of capital? See,
Total cost of capital.
yes, total, overall, mixed cost of capital. You can say in all. See, whenever there is a company, think about a company. The company has only equity share capital. You tell me, only one type of capital company has?
No.
No,
No.
No, ma'am.
no.
No, ma'am.
They have mixed type of capitals invested by the investors. People come and invest in equity also. There are people who invest in preference shares. There are people who would want to invest in debentures. There are
Debentures.
people who would want to give loan to the company. Okay, there are people who would want to invest in bonds of the company because bonds are playing a very good role in the market. Wow, I want to invest in bonds, not in debentures but bonds. So there are people who invest in different types of securities. There is not single type of investment which is available for the investors in the company. Yes. So there are
Yes, ma'am.
mixed capital. No, it is mixed capital which is available to people in the market. Okay, so people would invest in different securities as per their wish, as per their objectives, as per their nature of their investment. Do they will have to check for how long they will invest in your company, maybe for just 3 years, maybe for a long period of time, maybe for 20 years they want to invest. So depending upon their characteristics, nature of the investment, objectives of the investment, they will have to decide what type of investment they will do in your company. So you are offering different varieties of investment to the investors. You are offering varieties of investments to them, right? So you will have to pay to equity shareholders also. There is a single company who is paying to equity holders also. You are paying to preference shareholders also. You are paying to debt, matlab debentures, bonds. You are paying to everybody. Therefore, you will not calculate what amount has been paid to debt, what amount only, what amount has been paid to equity only. You will not you will calculate what amount has been paid to equity. You will also calculate what amount has been paid to debt, debentures, maybe bond holders, maybe um, somebody who has given you loan. You will calculate. You will also calculate the cost that you have to bear on preference share capital. But that's not a full stop. You will calculate the overall cost of capital also. See, after calculating the first expenditure, equity, the second expenditure on preference shares, the third expenditure on debentures, the fourth expenditure on bond holders, then last step would be calculating the total cost of capital. That means taking up the total cost. Calculating all the cost together is known as overall cost of capital. Okay, so that means total cost means you have to add all the expenditures in the at the last point. You have to calculate overall cost after adding all the different costs of different capital holders. So literally you will not add. There is a shortcut method. You don't have to calculate single cost of capital. No. You will calculate weighted average cost of capital. आपने क्या करना है, वैक निकालना है. ये देखो ब्रैकेट में दिख रहा है वैक, WACC, इसे कहते हैं वैक. व्हाट इज वैक? वेटेड एवरेज कॉस्ट ऑफ कैपिटल. What is weighted average cost of capital? I'll tell you. See, there is in your company the total capital of the company is 10 lakhs. The company is of the value of 10 lakhs. The total value of the company is 10 lakhs. Now 10 lakhs is divided into different parts. 5 lakhs is taken up by equity, 2 lakhs is taken up by preference shares, and 3 lakhs is taken up by debenture holders. So there are different types of investments. See, there is equity also, there is preference also, there is debenture also in your company. So to everybody you will have to pay. No, you cannot say because I am paying to debenture holders. So you will not say preference shares. You will not ask preference shares to not get anything from the company. No, they will not wait for anybody else. They will not wait for you to pay to others. No, they want their dividends anyhow. And if there are profits, equity share also will say, equity shareholders will also say, because you have earned the profit, you will have to pay dividends. If there is profit, you will have to pay dividends to equity shareholders also. So you will have to pay equity, you will have to pay preference, you will have to pay debentures. Okay. So proportionately, you will check how much is the proportion, how much is the weight that each one of them carry. The highest weight is taken by equity. The highest amount is invested by equity. The longer the, I mean, the higher the risk, the better the returns, right? Equity has taken higher risk. No, equity shareholders are more than preference and debentures.
Yes,
So
ma'am.
they will be getting a good amount of interest proportionately. Proportion will be higher. The rate of proportion will be higher than that of preference and debenture holders. I'm not telling rate of dividend and interest. No, I'm saying proportionate amount of uh, returns will be higher. Okay, so weight. I will have to check the weight. The weight of equity is higher. 5 lakhs out of 10 lakhs. 5 lakhs is taken up by equity. Only 3 lakhs is taken up by preference, and just 2 lakh rupees is taken by debentures. The lower the amount, the lower will be proportionate weight. The weight is less, no? Debenture holders are carrying the lesser weight, only 2 lakhs. So that is known as weighted average cost of capital. And how we need to do it, I will explain you during the sums. So what is WACC? It takes into account all the long-term sources of funds. Long-term, very important. Equities, long-term debentures, long-term preference shares, long-term bank loan, long-term, everything long-term. And it comprises of both owned funds, that is share capital, and borrowed funds. I told you earlier also. In case of existing firm, both marginal as well as overall cost of capital will differ, whereas case of new firm, marginal of marginal cost of capital itself is the overall cost of capital. See, when there is a new firm, because there is a new firm, there is no existing equity share capital. No, there is no such type of capital which was there in the past. No, we have just opened the company. So whatever we have new. Whatever is there is new. So there is no concept of marginal cost of capital. There is only overall cost of capital. But your firm is existing capital. But your firm is existing firm. 5 years are over. It is since 5 years you have opened the company. Now after 5 years you are expanding your company. So you are investing new. You are putting up. You are asking public to invest in new equity shares. Okay. So existing equity share is also there. New equity shares are also there. So with existing, new comes into the picture, no? Therefore, they say marginal and uh, overall. It is different from each other when existing firms are there. Okay. Did you understand the meaning? I hope you understood.
Yes,
Yes?
ma'am.
Yes, ma'am.
Okay. Okay.
Yes, ma'am.